friends, I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. Let's dive straight into the charts. And as you notice here, I actually have the Litecoin chart up behind me rather than the Bitcoin one. We will be going over to look at Bitcoin in just a few seconds. But I wanted to point out that yesterday I put out a bonus episode about Litecoin, so you can check that out on the channel. I'll also link to it in this episode, I'm sure, and in the cards thing that pop up. And it's quite interesting. Is this going to be a canary in the coal mine for us, or are we actually witnessing this get ready to pop, so to speak? We're right at the 200 simple moving average, this white dotted line here on the daily time frame, and these things haven't crossed over on the 24-hour time frame for a golden cross like we've seen on the other daddy pairings out there, such as Ethereum USD and of course Bitcoin USD, which we're going to look at in a second, like I say. And we're below the 233 moving average. Various things here which are still remain in a sense kind of bearish about the prices until such times as they move up beyond the areas that they're at now. And what we've been looking at as well is actually quite easily diagnosed, I suppose, if we go down to the 4-hour time frame and see where the 21 EMA is coming in at, just here supporting the prices currently. If we drop down below that, that could be quite negative. Let me put the drawings back on. You can see this rising wedge that's over here and the 236 moving Fibonacci retracement point in there at 53,000 or 533,000. We spoke about all these targets yesterday and we have actually arrived down to them and this is us now at that question mark point really for us. Could we actually see a measured move coming off the back of this, taking us down to the golden pocket here at 497, sort of 500,000 Satoshi level, or not? That's what we're asking when it comes to Litecoin. And is this going to be a canary in the coal mine for us in terms of the bigger daddy coins out there for us, and perhaps will we see this break towards the upside, and how would that all operate if the other coins do something differently? So what is the case with Bitcoin? Be sure to check out that Litecoin episode from yesterday. Very good information in it, as you can see there in that quick summary. And what we have here in terms of Bitcoin is various different ways of looking at this, and one of the ways of looking at it is this parallel channel I've got in the background, where we came right down towards the median line of it in yesterday's show. If I just stick on the 24-hour time frame, it'll make it easier to make this point. Came down towards the median line of this thing, talked about what could be subsequent targets for us, perhaps the 21 EMA, which we got pretty close to in today's price action, having seen lows of 11,600 so far in today's Gregorian calendar day. And if we look down, then we could also look towards targets like the 11,500 area, where the bottom end of that channel is coming in at, if we did actually come down and properly test this 21 EMA. So these are the things that we're looking out for on the show, and I think it's maybe about time that you stopped making the Rocky Outcrop Technical Analysis show be crypto's best kept secret. Cheers. Because if you've been a subscriber here for a while, you'll know that we have been putting out the best information for crypto technical analysis for all the pairs that we look at since we started the show. Got a really, really fantastic core group of Rocky Outcropticians out there, and I know that yous out there all do, promote the channel and everything else, and that's really, really, really appreciated. But you've got to, when you look at the stats, let's just jump on over to the videos here and just have a wee quick look here behind the scenes. You can see that yesterday's Bitcoin episode got 63 views, which is actually quite a lot for a Bitcoin episode. If I just scroll down a bit, you can see 53 for that's Ethereum there. Where's the previous Bitcoin ones? 47 views. And here we have 29 views. There's 49 views on this sort of semi-pistic fractal episode, which you got to laugh at. 57 views here on that Bitcoin episode. Just scrolling on down, 55 views. So when you see this, if you're tuning in to watch this right now, then you can be sure that you're perhaps represent 2% of the entire group of people that will actually watch this, just you and yourself. And isn't that quite amazing when you look at the quality of the information that we've been putting out over the last, since the start of 2020, really on that front. So crypto's best kept secret, the Rocky Outcrop channel. Maybe all of yous out there who are not telling your friends about it could you just do that? Let's take a closer examination of the price action then. And we can go over to the Bitcoin CME charts here just to check in with what we were speaking about a few days ago and this gap that we had on the hourly time frame. And as you can see with the wick here coming down to these lows of sort of 11,600 or so, we actually managed to fill that in this sort of breakout of this rising channel that we had on the go here. We're asking a couple of different questions about this as well on the way up. Would it be something like a half staff pattern for a bullish market in terms of this flag formation? And if it were to be one, that would be the bullish outcome, because overall, these types of flags where they raise up the way are not very bullish in their formation, I have to say. It's actually what you'd be looking for is more of a lateral movement or perhaps a slightly descending one than a movement towards the upside, unless you're looking at a half-staff move. And if this is a half-staff move, of course, that's kind of the most bullish outcome. As we've spoken about, you could take this as a measuring stick and stick it up towards the top side, and you'd be looking up towards targets such as, $14,500, for instance, on that. But, we could also be looking at coming back down to some of these other targets down below, such as the 10,500 area, or indeed perhaps where we have this gap, which could constitute a retest of this big old symmetrical triangle where the prices were consolidating for 3 months. Now, regardless of the drawings on this thing, by the way, just looking at the price action, you can tell that coming down towards these areas at just sub 10k would, of course, be somewhat healthy in terms of a retest of a movement since we broke away and we had this breakaway gap here, which is what, if you're looking for different types of gaps, then that's what that one would be considered to be. And we could, of course, then be fairly eager to come back there and retest it, just like we did actually here, filling in this hourly gap that we were speaking about. Now, if you had had this in mind in the chat and the run up towards these highs up here in the 12,000, higher 12,000s, like we spoke about on the episode, you might have been able to benefited from a short down the way. And so far, if you've not actually taken profit on this, then you're looking at your short being in around about 5% profit, or indeed if you took profit at the hourly gap area, maybe you got 7% profit just purely on that move alone. That's interesting. And we're looking at a decent solid $700 having been knocked off the prices really in terms of spot, having come up to these highs at 12,472, going down to these lows at 12,600. You're talking a significant number of dollars getting knocked off the price action of the prices of Bitcoin, talking $880 actually there in that move. So that's quite a bit, it's quite a bit. And but is it enough to constitute a proper retrace as part of what we've got on the go here? And I think that you could easily say that it's not really, given the overall, where's my drawings? Given the overall shape of this parallel channel that we still find ourselves within. Now, there's a different ways of drawing this on, and I talk about these things frequently on the channel. I started off looking at this particular chart, but if you can look here on this one, which is the the Coinbase chart, doesn't really make much of a difference what chart you're looking at really, then you can see that I've got this incorporating the wicks overall on this one. This actually was drawn in a while back, and as the price action came up and re-entered into this area overall here, and we are now at the median line here of the 11,800 number, and I would like to say that we're also below the 236 Fibonacci retracement number. Are we? No, that's premature. Sorry, I said that too early. We're not below it. Certainly not. Surely I have another Fibonacci already drawn on here on several other charts. Are we below it or are we right at it? Let's take a look here, and we're above it because it's in at 11,500. That's drawn in from there. That's the wrong place. Let's look at it again. Let's just reanalyze this. 11,683. That's where our 236 is, and the bottom of this is drawn in from that swing low just before the rise up. If we take it from the actual previous low before we came up the way, then you can see that it's coming in at 11,629. And if I just readjust this again over to sort of significant other periods as well, you can see how this lines up in and around about this area here of this blue serrated line. So we don't really need to look too much at that 236 necessarily in and of itself. We can look at this blue serrated line here at 11,580 and call that our sort of bull case, short-term bull case scenario, Alamo. Now, if you remember and you were watching the show back when we were talking about this pitchfork, which we have extended out beyond, and I'll analyze that in a little bit more detail in just a moment. But if you remember here, we were talking about how certain moves around certain areas could preclude a move towards the other areas. And that actually is what happened as we went above this upper line here. And we spoke about a movement up beyond this could actually preclude any moves down towards the median, or indeed the lower line, or indeed the lower warning line down there in that 10,500 area, a number which you'll remember from having just spoken about it there a few minutes ago. And then subsequently we came up here and we challenged the top end of this and moved beyond it. Now, people who are interested in pitchforks and have been asking me about them recently and have been watching the episodes and subscribed and all that good stuff will probably have seen me doing things like this along the way, where I take a pitchfork and I copy and clone it and stick it in and talk about the next area beyond it if you were to move beyond it. Or indeed another way of doing that exact same thing would be simply to take a parallel channel, for instance using the parallel channel tool here, and just draw in matching where we have the upper warning line, taking it down to the upper line, and then grabbing it and moving it up and dropping it up above where the price where the upper warning line is, to give you this target towards the top side, and it has an uncanny characteristic here where it clicks right in with the top side resistance that we actually came up and touched at $12,500. Is that much of a coincidence? Well, I would tend to say that it's not really, and that's just kind of the sort of technical analysis that you can expect on this channel should you watch it on a daily basis. Now, of course, I'm pushing the channel at the minute a wee bit because we have a target 1,500 subscribers that I would love to get to by September, and that's why I'm saying let's not let this be YouTube's biggest crypto technical analysis best kept secret any longer, because we are doing such a stellar job. And now, of course, I really do appreciate every single last one of you. And I think that you're the most fantastic people in the world. Genuinely do, really do appreciate it. And if you want to see that in action, then you can look at it you can look in the Discord. We can all chat. You can see how great everybody is, and you can be a part of that community if you want to as well. Of course, no pressure there. I totally understand that chatting isn't everybody's cup of tea. Right. So anyway, what else do we have though at the minute offering up support that we've talked about in the recent past? Well, we have these lines that I've got drawn on the chart, and you can see very clearly that the body of this has come in here up to this 11,800 area where this upward sloping support line currently exists. And of course, that's going to be where that median line is on that channel that we're looking at on the other chart there. Now, the reason I'm using different charts, by the way, is purely so that I can have these things housed in different locations in order to sort of compartmentalize when I scroll through different things and talk about different things. This is that fractal one I was talking about, by the way. As you can see, the moon and stars were it's still on, but the fractal has failed. Fractals almost always fail, by the way, and they're rubbish. So the fractal, but what could we talk about? Could we say that it's still on in a sense that we've got this previously I was saying we had this higher high in here was a more condensed version of this fractal over here. Could we say that instead that this higher high here is actually this one that came in on the 17th of August over here from this fractal? If you want to, if you believe in it, and you'll do like if that's good, then you'd be looking at that overall kind of this more or less being the structure for this thing if we were to go towards the moon. And how does that line up with what we've been looking at then? If you want to retune with the fractal thing, now obviously this isn't my cup of tea. As you can see from all the other stuff that we look at, there's plenty of other reasons that you can do which are more grounded in reality, let's face it, more sort of sensible and professional, if you will, reasons for doing these, for making your trades. But if you want to look at fractals, this is like I said at the time, I'm the fractal king. Cheers. And yeah, well, this is how you would do it. Now, because we already measured all this stuff, and this looks like it's just been drawn in by a 4-year-old child. This was measured out and has a reason for these particular areas, as you can see on the video. If you want to go back and look at that on the channel, then what this kind of suggests us is that we've come in and around this area where we would need to have gone down to. Then we could rise back up to the next section of this, which is where was the next section? Canny mind currently, where the next section would be of this fractal thing, and maybe then go on and upwards and on to the banana, moon, and stars. So it's still on in a sense, right? If you want to talk about it. But also the way that we were talking about it before has also clearly failed. It's a bit of a sort of hit and miss type way of doing technical analysis. I much prefer things like this, which are far more sort of grounded in reality, like I was saying. Anyway, on the go here. So what am I looking for then in terms of top side, lower side resistances and support profit taking targets? That's what we call support and resistance lines on the show. We always call them profit taking lines. Where are they currently? What are we looking at? What have we got on the charts? And let's just go through this. Now, I can remove that line there from here because we have these lines, these horizontal rays drawn in to show where the gaps are on the charts, and this one has been filled like we spoke about. So we've covered that off now, and I can remove it from the chart, so I've done so. And the next area is towards the downside, really, in terms of this thing. If we're just going to broaden it out from what we already spoke about, because I have covered quite a bit of them already in this rapid fire analysis, is 11,350, 11,070, and then 10,825. Looking at this CME chart at the minute, and there's certainly a premium on here, but it's not as big as it has been. You might notice some other episodes such as Tyler S today, shout out to Tyler, talking about the premium that exists between sort of the how contangled futures Bitcoin prices are compared to the spot ones. And actually looking at this right now, you can see that while his episode's quite clearly called "This has only happened 3 times since 2017" or some other clickbait along those lines. that it isn't particularly well thought out necessarily, no offense, in terms of just, how the average rocket croptician out there has been looking at these things for the last however long. As you can see here, there's currently $20 now. Obviously there's a delay on this chart, and I could come in and check on it later if I want to. You can do it yourself and see what sort of premium or whatever we're dealing with. If I just want to drop down towards the 15-minute time frame and see that over the period of the last 15 minutes, we've had highs of 11,900, lows of 11,877. And over here on spot prices, we've had highs in the previous 15 minutes of 11,855 and lows of 11,822. So, in comparison wise, you're not seeing that massive distinction in the prices. Now, of course, he's not wrong in what he was saying. Just wanted to point out that there's definitely another way of looking at this, like we do on a daily basis, essentially with the charts, and that's not really showing that to be the case in terms of the contangled nature of the markets. Now, that could also be signaling something else. It actually offers up a really pretty good place for people to, when you're talking about futures markets, being able to essentially offload their Bitcoin at a rate which is currently higher than the previous one, enabling people to do things like put that squeeze on miners, which and sort of kick the can down the road in terms of the capitulation, which could happen if we were to see a big drop in the prices. But for those sort of more inefficient older miners, now what was the distinction between nowadays and 4 years ago at the last halving, and then the 4 years before that for the previous one? What you're looking at is that there actually are markets now for these things to take place, which didn't exist before, enabling people who are actually mining in these corporations to be able to do so, to be able to have greater control over how they conduct their business in terms of capturing market share. And the way that these things do that is by is a sort of fluctuating dynamic between the current market price, the difficulty score rating sort of element of the algorithm in terms of Bitcoin, the difficulty for mining, and of course basically those two things really, because that determines the cost of mining it, and therefore the underpinning cost of the market, which is what enables these smaller, more inefficient older miners to remain part of this market, and they have done ever since the actual halving took place. People were then talking about how the capitulation for miners could have taken place in that COVID drop, and it didn't really necessarily happen. So if you're looking at things from a macro scale, just chucking this out, I know this sounds very bearish, I know it does, but I want to, because I was just checked in with YouTube beforehand, and I watched 5 minutes of Tyler's episode, and he was very bullish on things, and I thought, well, hey, how about we have a slightly different sort of conversation to rebalance things a wee bit and talk about things slightly differently. And anyway, I've gone off on one, so I'll start, so I'll finish. So the futures options, opens up different ways of actually conducting your business, which means that perhaps the squeeze that could happen has been kicked on down the road, and that's something to look out for. Now, other things as well to look out for, of course, include things like the traditional markets. It's currently 13:52, so 2 p.m. over here in Scotland. Have the traditional markets opened up? No, we're still in pre-market here, and as you can see here, there's a bit of a drop-off in price action, but we talked about this yesterday. Did we come up and set in a high? And we did set in a high yesterday by a handful of cents. There's things that we could, just in terms of gaps alone, just to look at in terms of those things getting filled in, and they do tend to get filled in, okay? So that's them, and if that happened, then would we see a pullback in prices? Now, I want to say that we are still very much looking at speculative assets here with the crypto, okay? They're not this safe haven thing that people really want to suggest that they are quite yet. Interestingly, at the same time as having these all-time highs on this, we've got, massive all-time highs recently coming in for things like gold. You can get gold up just simply by typing gold if you want to, just in terms of getting a real quick price for you out there. And you can see that we had our all-time highs on gold just over there on the 6th of August. If I go up to something like the weeklies, you can get a lot more price action in here. You can see how significant that is. The monthly there, for instance, that goes all the way back to the 1980s on this particular chart. So very, very high prices there. Coming at the same time as we've just put in highs on the SPY. So just leave it on the monthly and go back over to SPY so you can see for these highs didding. Okay, you can't see because the drawings, but I'll take them off as you can see. So isn't that kind of interesting? You talk about safe haven assets and everything else. Well, it's interesting. There's various other things that might be of interest to you as well, such as the deprecation of Swift coming up on September the 1st might be of interest to you. Things like that that might affect the way that you look at your trading coming up over the next wee while. Just want to say then, going back over to the prices, what can we look at then in order to kind of be able to trade this thing? Because actually, Tyler would tell you himself he's not actually a trader, and all these people out there in the world that do these, the vast majority of people who do technical analysis that you watch aren't actually traders, and they don't really have that experience of needing to rely on their trading in order to get by in life. Where instead they're more like analysts, where being wrong just means that they can correct themselves down the line, as opposed to have to eat a loss, which is what I think you and I, as actual traders, are looking at when we conduct ourselves in the markets instead. And we don't want to eat losses, and we want to eat profits. So what can we look at in terms of actually trading this thing, and what's knowledgeable, useful knowledge? Like, we're a third of the way into the month at the minute. We've got this candle here. This could obviously go either way still, but worth pointing out. But we've any retracements down towards the 10,700 are still totally fine overall, as we've already experienced a couple of times this month, really, since coming back up the way. And that's something to be aware of, just in general in terms of moves, because those would wipe you out if you were trading leverage style. So just so you know, of course, it's nice to be permabula on this thing, but if we were to take out the wick that we've already set in here, that 12,500, that's currently quite obviously operating up as our highs at the minute, and I would expect perhaps then a retrace back down to that 12,500. I would be quite curious, but we could go up towards 13k as well, just something to be aware of. But then where would we experience a pullback along the way? Of course, we don't have to, but I just want to point out that it is quite rare, really, overall, for us to have candles which have not got a wick on the top of them, right? In terms of the monthly time frame, looking back in the past, in terms of all the green candles for wicks for candles that don't have wicks on the top of them, this is pretty close to not having one, but it does have one back there at the start of January, going all the way back. Then the last time we had one was October 2017. That's basically got no wick, and August 2017. Now, of course, that is part of this very, very bullish movements that we had in that run up in the big all-time highs in 2017, and that then, of course, moving up towards that 12,500 for a monthly close would cut off that wick and leave us with a very sort of stubby body on here. And that would be interesting for us, where we could then see continuation towards the top side, or indeed a pullback, whatever. But we'd be looking at things very bullishly at that point. I would be hesitant to sort of double down on your bullishness until we've kind of gone past that 13,000 point of view. Really, just in terms of the big broad time frame. But then at that point, you're looking at a sort of slightly different scenario. On the weekly time frame, you can see how we've got this red doji just currently at the minute, kind of offering up a little bit of indecision for the markets in it around about these really shockingly big prices of 12k, where we've had a massive rise up in prices of many percents here since the lows at 13th of March of 245% rise up. This is what we've been calling as rocket crop-ticians the bull market, really, because in all of this period towards the top side, there's numerous bearish case scenarios, which from a technical analysis point of view really did make a lot of sense, except they didn't play out because it's a bull market. So that's what we've been talking about since then, all the time. So that's why you've got to say, well, it's an uptrend always. But now that we've come up to this area, and where other people are talking about it, maybe it's worth kind of being a bit more sort of skeptical necessarily at these key inflection points, and just remember then that this could obviously just signal something else to us, rather than necessarily the bullishness that may exist in and around the world. Of course, people are very revisionist, that as I tweeted about earlier on. I could get my Twitter up if you want to see what I tweeted about earlier on, because I put a couple of tweets out where I was yapping. Let's get Twitter up. Here's Twitter for us, and there's my profile. No shame, wearing disposable mask upside down is more comfortable. I've seen people shaming people on Twitter for their mask on upside down. I find it more comfortable upside down. Okay, so be your own person. That's what that is. That's the subtext on this, is be your own person. Rely on yourself. That's what we talk about. Core tenets of being a rocket crop-tician. This guy said, "Don't waste your precious time and energy wishing things were different. Things are as they are. Stop complaining and start doing." That's a real realist point of view. You'd almost think this guy had Calvinist Scottish parents, the way that he talks like that. Interesting. I translated this to something that Scottish people would understand a bit better from their own parents. Stop crying, or I'll give you something to cry about. Here's another one I was putting on because somebody, Elon, good old Elon there put this GIF, I guess, or video of his big old spaceship coming back down to Earth, and I said, add your favorite crypto ticker here if you're looking for some meme time fun. But what else I said here? A couple of things. Coinbase being crap. We've talked about that on the channel so many times recently. Read the comments. I thought it was funny about the moon, Carl. Good man, Carl. Great part of the crypto industry. A lot of skepticism about his analysis out there. That's cool. That's acceptable. My timeline is absolutely full of revisionist bullshit. People who want to be seen as real crystal ballers. It's total fucking bullshit. Unfollow party begins now. I unfollowed a few people today because I'm bored of that. Time for watch all your favorite folk on Twitter and YouTube pretend they had it all figured out all along. Enjoy the bullshit day. So there'll be that out there for you today. Just be aware. Shout out to Kevin for this tweet here. That's good crack to see. Decent chat from people. And then as well, this tweet that I put out 13 hours ago where I was kind of thinking about that whole setup. Be lazy and stupid and say crap all day for mass appeal to make the social media monies, or keep doing what I'm doing and crushing it with people whom I care for and respect. Hard choice. Not really. Not a hard choice at all. And of course, where did somebody show more replies? So I just see it here. Keep doing what you're doing. Love the videos. Shout out to Jacob. Thank you so much for your support. Of course, that's what I'm going to keep doing. It's not a hard choice at all. And as you can tell, that's what this video is all about. So going back over to the charts yet again, just there's a lot of stuff out there which is going to be useful for you whenever you're doing your analysis, conducting it yourself. I just wanted to kind of throw out some ideas for people in this episode as well. So bearish divergence on the daily time frame across the board as we look at this recent high that came in here. This is the 2-day time frame. The daily time frame likewise on that as well. You could make the comparison between this most recent high and the last high on the RSI and the stochastics, the DMI, and whatever, and say that it's not actually there just between this point and this point. But actually, if you're looking at it if you want to sort of look at it from a broader, more perhaps a reasonable point of view, then you would say that it is there. Look towards the 4-hour time frame, and what do we see just as the prices came up towards this high here versus previous highs? Well, if you call this the previous high, then there wasn't any bearish divergence there. But what if you called this one the high, given that we came in for this low there afterwards, and then this is kind of the flux on the way up, and you're looking between these 2 points here? That's where you find that bearish divergence across the board. It's definitely there, so just something to be aware of. And do we have hidden bullish divergence on the go? Well, you could make that debate about this little drop down here in price action, but hidden bullish divergence just simply becomes bearish continuation should you have a downtrend thereafter, which makes it quite key till you're looking towards that 12.5 area in terms of movements towards the top side, and then movements towards the lower side. I suppose you could look towards that 11,000 area, 11,150, like we've spoken about a few times recently, and those things will all pan out together, match up with things like when we put our drawings back on the chart. No bother at all in terms of just numerous different things. Now, we've had this other Fibonacci on the go for a while. Might as well drag it up so it matches in with the higher price action. And remind people again, the 236 is there at 11,638. Then the 382 comes in there at 11,100. The 50% at 10,600 or 10,700, and the 618 golden pocket comes in there at 10,100 to 10,200. Now, if you were to do that, we could also see the CME gap being filled over here and other negative things happening. And if that were to happen, you might now be looking at a 786 retracement on this one if you were to go all the way down and actually try and do that there on that time frame. So that's all the very negative stuff. Of course, the bullish stuff I think speaks for itself. It's kind of fairly simple. It's what I've been talking about. An easy, reasonable profit-taking target could be 12,600 or so in terms of movements towards the top side. There's a lot of scope for making money doing longs off the back of this. You're looking at 12,600. You're looking at 8% move, 9% move towards the top side. Very, very, very nice. I mean, that's some people's entire year's trading would be done in one trade if you were to long list towards the top side there. And you'd hope to be managing your risk, I suppose, in around about that 21 EMA that we spoke about already. Bearing in mind though that that's a riskier move to be looking at, that we are below if we were to actually see those prices moving down the way towards this 21, again, having come down already close to it, and would that be close enough is close enough? Well, movements down the way could signal a sort of downward trend on these lower time frames that we're talking about, where you'd have these other targets getting hit, and you could be looking at moving down below the 236 along the way there. so managing your risk in and around that area would be crucial, given that you could be looking at bigger drop-offs thereafter. But that would be okay, and you wouldn't be moving up above this Fibonacci line that's kind of sticking in our faces there, which is a 786 on a Fibonacci from way over on the left there. So we know that there's sort of key inflection areas in around this zone, and of course it's no surprise that 12,000 is as a round number would obviously be one of those areas anyway. So that you don't need that Fibonacci, you can just kind of talk about it in terms of the general basic psychological level of these things. And so yeah, upside targets taking out this high here at 11,500 and going up towards 11,600 for a close up there in any sort of decent time frame would be worth looking out for, and asking the question then, how have we actually handled this bearish divergence, which is on here, okay? Just real generally looking at this upward sloping line there and this downward sloping one, then it's there. So then if we could throw that off, then that would be good. And what would that look like? Well, perhaps coming up towards these overbought territories yet again here on these lower time frames, or indeed on the higher time frames, properly securing a place back within the bullish control zone, or indeed up towards the top end of the stochastics yet again, and towards the 40 line, pushing the ADX up and everything else up the way as well as part of this upward trend. And we would hopefully see then as well the DM positive retake the sort of ADX line even, or its previous high up here at that 58 area, or 55 as opposed where the previous high on the DM positive came in at, on the way up towards the top side, with hopefully without any sort of divergence happening on the MACD, because divergence on the MACD is probably going to translate to a rising wedge on the go, bringing us back full circle to that Litecoin canary in the coal mine chat that we started off with, and saying that there's various things that you could look out for. Of course, as well, there's other things that we haven't quite achieved in terms of gaps and whatnot on the GBTC charts. It's worth pointing out though that we had this one on here. This is a 24-hour time frame. I should have talked about this, I suppose, back then on the 6th of August. Maybe I did, can't remember. I'm going to take that off now because we had a gap in the past that was over here, which has been filled now. So can take that off. And the gaps then that we're looking at on GBTC all exist towards the downside, with the first one coming in there at 13.7. We're at 14.39 at the minute, looking at 2 or 3, sort of 2.5 towards the top side, $2.5 towards the top side in terms of premium on this thing, which I suppose is what Tyler was talking about in terms of premium, I suppose, but this isn't a futures contract, it's a different idea. Could we see that contract a little bit and those gaps get filled in? And if a 13, what was it we said there on this one? 13, say 13.7. What's 13.7? Take that off. You may be looking into the 10Ks in terms of spot prices for that. If that were to come down and fill in that gap there, thereafter is another gap there at the 12.2, which you could be looking at as being the sort of the 9.9 filling of the CME chart gap, depending on how things go. Maybe worth looking out for. This is a sort of yet another one of these sort of well-kept secrets in terms of crypto. Not everybody looks at this thing for its gaps, but they do actually tend to get filled on that one. That's going to have to do. I think we've got a lot of value in there, a lot of shill in the channel, to be honest, more than we usually do. And I've said we throughout, by the way, because I incorporate all you have to come up with your own ideas as well. I put up all this information. I think it's some of the best out there on YouTube, really, and I do think it's some of the best that enables you to make your own decisions. And I go right up to the very line of telling you exactly how to trade things so frequently, but tend to avoid doing so, apart from perhaps whenever I'm on painkillers and I forget myself or whatever. So, subscribe for those. They've all been pretty good. Those mistakes still, I avoid making them because I want you to all remember that you are the ability to become a self-reliant, independent, resilient, and consistent trader definitely exists within you. I absolutely believe it. So go ahead and invest in yourself in terms of your own belief and confidence moving forward with your own trading, and that's what I try to do on the channel as your sort of spirit guide. So I hope that you've got something of value from this episode, and that you then relinquish this and let this, the finest of cheeses, put its pong out there under the nasal cavities of our fellow traders out there, because we know that the whiff of this technical analysis is something to behold, and that it really, we're going to have to stop keeping it all locked away, because there's people would benefit greatly, I think, from watching this channel, especially when you look at the content which is out there kind of competing with it, and I'm not proactively pushing the channel massively. I want it to be an organic thing. I was not advertising it or anything. I just think that there's value out there, and I often get told by people who are like, who watch the channel and stuff like that quite a bit, that, why do you even bother making the Bitcoin videos, and I do it because this is the daddy coin. It's one of the ones that I trade more than the other ones I talk about even, but nobody watches the video, so it's time for that to change, I think. But we'll see. And besides, 1,500 by September. Let's keep the ball rolling. All that good stuff. I'm going on to make the other episodes that I make on a daily basis right now. Ethereum, Chainlink and Tezos. I really do appreciate you tuning in. 1,500 by September. Make it possible. YouTube.com/RockyOutcrop. All that good stuff. Okay, cool. Nice one. And I'll go back to not shilling the channel so much tomorrow for you if you're tempted to subscribe. Thanks so much. See you then. Oh, and by the way, did anybody, maybe yesterday's video, like I said, that got the views, got how many views did it get? 63. Let's go to the comment. Let's go to the video itself and go comments and takeaway of I haven't responded. And you see that there's that nobody's really talking that much in terms of how I sang this song, "The Gambler" by Kenny Rogers here at the start of it. So, best kept secret. People don't even want to put in a lol at the bottom to when I'm doing this thing in this video by just looking at through it. Let's do it together. The words are on your screen. Nobody even puts a lol in there. So yeah. Be the change you want to see in the world. Anyway, I'm just me. I'm just being me. I'll always just be me. That's Rocky Outcrop, and I'll be back again tomorrow. Thanks so much. See you then.